All right, today we're going to tackle one of the most talked about and, let's be honest, one of the most confusing funds out there, the YieldMax ULTY ETF. It's got numbers that make your head spin, both good and bad. So is it a trap, or is there a real turnaround story here? Let's dig in.
Okay, so the first thing that jumps out at you, and pretty much everyone else, is this number, an 80% distribution yield. I mean, that's just an insane figure, right? And it's exactly why so many investors are looking at this thing for massive income. But that's really only half the story.
Because this is the other number that makes you stop in your tracks. Since it launched back in February of 2024, the fund's share price just cratered, dropping by almost 70%. So you've got this incredible yield on one hand and a catastrophic price drop on the other. How do you even make sense of that?
And that really gets us to the heart of the mystery of ULTI. Is this thing a high-yield trap that's just slowly bleeding out to zero? Or is there something more going on under the hood? Well, the truth is, most of the analysis you'll find online is probably already out of date. See, to really get what's happening here, you have to understand that we are basically looking at a tale of two completely different funds, just hiding under the same ticker symbol. Seriously, the ULT that launched in February is not the same ULT that you'd be buying today. Not even close. This timeline here shows you exactly what I'm talking about. You look at the chart, you see that terrifying nosedive at the beginning, but look a little closer. Right around the end of March, that free fall just stops, and the price completely flatlines. It gets way more stable. Now, that was no accident. It was a deliberate strategic pivot by YieldMax, and it is the absolute key to understanding this fund. So, what did they actually change? This wasn't just some minor adjustment, okay? This was like a complete engine swap for the entire ETF. Let's break down the 3 huge changes they made that totally transformed this thing. First off, they moved away from a purely synthetic strategy, where they were essentially just making bets on stock prices without actually owning them, to now buying and holding the real underlying stocks. That alone is a huge deal for stability. Second, they brought in a totally new option strategy called a collar. And third, they switched from monthly payouts to weekly payouts, which, income investors absolutely love. So what in the world is this collar strategy? Well, the simplest way to think about it is as a defense-first approach. Its main job isn't to chase huge gains. Its main job is to protect the fund against those big, ugly, catastrophic losses. It basically builds a safety net under the share price. It works in 3 pretty simple steps. Step 1, ULTI owns the actual stock. Easy enough. Step 2, it sells an upside call option. Now, think of this like putting a ceiling on its potential gains. Selling that option is what generates a lot of the income. Then, step 3, and this is the most important part, it uses some of that income to buy a downside put option. And that is the safety net that kicks in if the stock price takes a dive. Okay, so YieldMax completely retooled the strategy. The million-dollar question is, did it actually work? Let's take a look at the results since they made that pivot and see what the numbers have to say. And honestly, the results are pretty stunning. Since April 1st, so right after the changes kicked in, the fund's total return is over 32%. Now, you might be wondering, how is that even possible if the share price is flat? Well, that's the total return. It's the share price plus all those massive dividends being reinvested. The new strategy successfully stabilized the fund's value, or its NAV, while it just kept pumping out cash. And this right here is exactly why that tale of 2 ETFs idea is so important. If you just look at the since inception number, you see a kind of misleading 16.55%. But if you isolate the performance of the new strategy, the one that's actually running the show today, you see a much, much stronger 32.37%. This is why judging ULT based on its disastrous launch just misses the entire point. So, the comeback story looks pretty darn good. The pivot worked, the returns have been solid since then, but this is where we have to pump the brakes and be a little cautious. What are the risks that are still lurking around, and what is the ultimate test that this new strategy has yet to face? Well, the biggest risk becomes crystal clear the second you look at what's inside the fund. It is massively concentrated. Something like 77% of the entire fund is crammed into just 3 sectors: tech, fintech, and crypto-related companies. With only about 22 positions total, this is pretty much the exact opposite of diversification. Now, to be fair, so far this extreme concentration has actually been a huge advantage. And why is that?
Because those just happen to be the exact sectors that have been on an absolute tear lately. I mean, since the strategy change, some of its key holdings like NIBAs and Oklo are up over 200%. The fund has basically been riding a massive tailwind. And that brings us to the most crucial point of all. This new collar strategy, with its fancy defensive safety net, has only ever operated in an environment where its underlying stocks have been going to the moon. Its ability to actually protect on the downside hasn't really been put to the test because, well, there hasn't been a downside to protect against yet.
This quote really just nails the trade-off here. While those stocks it holds were soaring by hundreds of percent, ULT's share price just stayed flat. That ceiling we talked about from the option strategy kept it from capturing all that massive upside. But like the quote says, that was never the point. This fund isn't built for growth, it's built for income. So, that leaves us with the final and most critical question. The new strategy has proven it can stabilize the price and pump out huge amounts of income while its holdings are booming. But the real ultimate test is still out there. When, not if, the high-flying tech and crypto stocks it owns finally face a serious correction, will that safety net actually hold? That right there is the billion-dollar question that's going to define ULTI's future.